The bounce that started midday on Thursday continued on Friday with the SPY up 1.25% in a fairly low volume trading session, closing at 591.95. In our previous video, we pointed out the support just above the 580 level along with the large gamma exposure that we saw during Thursday's trading session. That support obviously held and helped the big bounce that we saw on Friday. And we stalled right at our upper dealer cluster zone. This was also the primary area where most of the volume was coming in on Friday. This is GEX at the 592 strike. Most of that is 0 DTE, and so that's going to be rolling off come Monday morning. I expect this dealer cluster zone to move higher. The next largest GEX level on the positive side is going to be at the 600 strike. Right now it looks pretty small, but I expect that level to be growing Monday and Tuesday if price stays above the 590 strike. Zooming out just a little bit on our chart, you can also see how important the 600 level is. This is previous resistance multiple times, which was finally broken through after the Thanksgiving holiday here in the US. We traded above that 600 level for about a week or two before the FOMC announcement on December 18th, which caused the big sell-off and volatility that we've seen since then. So this is going to be a big level. We actually attempted to test it right after the Christmas holiday, and so you can see if you just draw a very simple resistance line at that level, how important that's going to be. So we've still got quite a ways to go before we're back at attempting to break this level, but we could see an attempt at that 600 level this week. So that's something we're going to be watching for. We'll be looking for the gamma exposure to grow at the 600 strike. We'll be looking for some larger volume than we saw the last couple of trading sessions also at the 600 strike. Those two indicators are going to be key to determining the probability for a breakthrough above 600. So key to watch that come Monday and Tuesday morning. Just taking a quick look at the downside gamma exposure data, we do still have pretty significant GEX at the 580 and 575 strike. These two levels have become far less relevant after Friday's bounce. So the gamma exposure at these levels is going to start diminishing very quickly as price stays above the 590. So a break below, we'll see these levels come back into play, and we'll see the GEX levels start growing larger if that does take place. But for now, the gamma exposure at these levels is carrying much less weight, especially since we are back in positive gamma exposure territory. If we scroll down here to our historical GEX chart, we can actually see we closed for the first time in the last 6 trading sessions. We actually closed above the zero line, so above zero gamma exposure, back into positive GEX territory. Let's see if we can hold that into this week. I think that's going to give us a much better shot if we can maintain above zero gamma exposure of getting back to that 600 strike target. And just coming down here to our GEX data graph, you can see most of the, of course, the 0 DTE GEX between 590 and 592. That was all right on the weekly close in Friday's session. Our GEX weighted volatility gauge has come down quite a bit, now only 48.2. If you recall, last week and the previous week, we were in the 70s and 80 range down here. And so this is a relative gauge, meaning we are comparing implied volatility on a relative basis. And this basically helps us to understand how we compare to historical implied volatility over recent time periods. Basically, once we get to these extreme outlier areas, we know that implied volatility is at risk of reversing. And that's basically what we saw. Once we got above this 80 level on this gauge, we knew that we were starting to get stretched in terms of implied volatility. And so we've been seeing a couple of bounce attempts here as volatility has come down in the market overall. Taking a quick look at the Qs, we're seeing a similar pattern as the S&P 500, but on a little bit of a larger scale, up 1.72% in Friday's trading session. Again, we also closed above the zero gamma exposure, so it's nice to see confluence across the major index ETFs and indices that we track, all closing above the zero gamma exposure line. Turning to Bitcoin trading above 97,000, making another attempt, as we mentioned, was likely against this 100,000 strike. You can see this is still a very large gamma exposure concentration, still a lot of volume coming in at that 100,000 strike. The focus has been around that level for quite a long time. We've been trading all basically throughout December around this 100,000 strike here. And so you can draw a line right through the middle of that. So it's going to be key to see how price reacts at that level. And if we zoom up here in the chart, there is still a large GEX concentration at the 110,000 strike. It is smaller than it was in previous weeks, but it's still there. And we could see more interest coming back over time, especially if price can get above that 100,000 level. So big key level here at the 100,000 strike. We'll be watching to see how volume and GEX data affect the price action this week. Next, I want to take a look at Nvidia. Nvidia trading just below 145. Huge move on Friday, up nearly 5%. If you've been watching our YouTube videos over the last couple of weeks, we've been highlighting the importance of this 140 level. All the GEX at that level has been acting as a magnet since mid-December, since we were trading in this lower dealer cluster zone. Of course, it took a few tries, a few bounces to get to that level. We actually rejected there right before Christmas, bounced off the zero gamma exposure level, and now we've broken out above that 140 strike. So that was a big move on Friday. The 145 level is basically going to be the next resistance point. But with all the momentum that's coming in here, I expect possibly some slight retracement before a further leg higher into that 150 strike. So you can see here our upper dealer cluster zone has been broken through. This is likely to move higher come Monday and Tuesday. The next target is going to be the 150 strike. We'll just zoom out here on the chart so you can actually see the price action. Multiple attempts at this 150 strike back in November ultimately was rejected. We only spent basically one 30-minute candle above that 150 strike. So the fact that we're coming up here again back towards the 150 is very bullish in my opinion, especially as we have GEX and volume continuing to come in at these levels. We could see during the month of January, we could see multiple attempts back up at this 150 level before potentially breaking through that level. And if we do, that's going to be a big breakout point for Nvidia. So something we're going to be watching very closely. You got to remember Nvidia is one of the largest market caps in the world, at times the largest market cap in the world. And so it takes a lot to get through some of these major levels of resistance. There's a lot of money sitting there, a lot of sell orders sitting there. So that's going to be something to watch to see how the price reacts to that level. But as far as the gamma exposure is concerned, this looks like the next viable target with potential further upside if we can break out above that resistance level. Next, let's take a look at Tesla. How quickly everyone gave up on Tesla when it had a few trading sessions of bad performance, but we're back above the 400 level, up 9%. I believe this was on multiple analyst upgrades on Friday, if I'm not mistaken. Double check me on that, but huge move on Friday's trading session, back above the zero gamma level, back above the largest GEX level at the 400 strike, and this 500 level is still in play. So we got to be watching the GEX and volume basically between 400 and 500. So the volatility is pretty extreme here. As you can see, the GEX data is suggesting the next target is going to be at the 430 level, followed by 450. So those are going to be our next two targets heading towards that 500 strike. We still think it has the possibility of tagging that 500 level just based on the gamma exposure. Remember, gamma exposure is not a crystal ball. It's not necessarily going to tell you the exact date and time and path, but what it does do is provide viable high probability targets based on where market participants are positioning in the options market. And so because we deal with probabilities, we can incorporate those probabilities into option strategies and then deploy those strategies in our portfolio. And that's how we use this data. So basically we got this bounce off the lower dealer cluster zone here below the 380. That didn't last long. Obviously the bounce was pretty sharp. We'll see if it can sustain heading into next week. But again, my first target this week is going to be this 430 level on Tesla. And guys, just a heads up, we are still running our holiday special, $300 off our yearly portfolio manager tier subscription. Use code HOLIDAYS at checkout. We do have a few spots remaining and we're going to be ending ending this promotion this week. So take advantage of that while you can. You'll get access to our gamma exposure data and our option flow analytics. You'll also get access to our premium Discord channels. You guys can check that out for free. Come on in and say hi. We'd love to see you. Link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.